And I want to talk to you guys a little bit about the deflationary cycle, because this is what really brings it home to you, the listener, about what's happening in our economy, why it's important to you, even if you don't own any stocks. But unfortunately, there are people out there, and I'm going to get on somebody's case here for a minute. I'm going to talk about Peter Schiff. Now, I know that I'm stepping into the lion's den here, because many of you who are libertarians, who are gold bugs, who are doom and gloomers, think that Peter Schiff is nothing short than a deity. But here's the problem with Schiff. Every time that the market hits a retracement, every time we start to see a pullback, Schiff runs out to the microphone and talks about how he's been right the whole time. He was talking about the mortgage backed securities, or I'm sorry, the what do they call it? Debt swaps. I'm trying to remember the exact name of it. Credit default swaps, excuse me. They were talking about bad mortgages, and he was talking about shorting them, and he was calling for a financial collapse in the housing market. And then it actually happened. And he got a lot of credibility for being one of the guys who spoke out about the massive collapse before it happened. The problem was he'd been talking about it for a long time, the whole time the market was going up. And then as the market came down, he took credit for the fact that he was right, but he continued to call for lower prices, or an inflated dollar, increased value of gold, a lower stock market. He kept continuing to call for the collapse. And he's been calling for it for 7 years. And now, yesterday, we had, the past couple of days, a 14% correction in the stock market. And Peter Schiff is running back out to the microphones again, and he's talking about how he was right the whole time. But I want to take you back to 2012. In September of 2012, Peter Schiff was on CNBC, and he was talking about how the whole system was set to implode. You can watch the whole thing if you just go and Google it. The quantitative easing was going to send gold higher, and that the dollar was going lower. He talked about the dollar index going to 40, which would be a massive inflation. And here was his prediction about what was going to happen in the near term. And remember, this is September of 2012. Play it.
Okay. All right, Peter, thank you so much for joining us. We're interested to follow up with you in a month or two and see if anything's changed. It's been good to have you with us. And, of course, we'll have more with Jeff Lewis in just a little bit.
The dollar will be a lot lower by then, and gold will be a lot higher.
He's been preaching the same message since before the financial collapse of 2008. And he just continues to stay on the same line. Now, here's the issue that I take with it. It's not that he's wrong in terms of economically what's broken in the economy. He's correctly identified that there are massive systemic problems in the amount of debt that we're acquiring, in the quantitative easing. But once again, what have I been talking about on this show? Very, very easy to identify a problem. Very difficult to understand and accurately be able to predict what the appropriate solution should be. So his whole shtick, the entire time has been buy gold, buy gold, buy gold. Stay out of the market. The market's bad. The market's terrible. It's going to implode. The whole system's going to melt down. And wouldn't you know it, once every 7 to 10 years, he ends up being right. But at the time of his prediction, the dollar index was sitting at around 80. So he was calling for a 50% decline in the value of the dollar. If you look at the dollar today relative to every major currency, the dollar is much stronger than it was when he made this prediction. You are seeing deflation in the terms of the exchange rate of the dollar relative to other currencies. Now, we've seen some modest inflation inside of like consumer prices and things like that, but it's nowhere near what he was predicting in terms of a dollar index collapse. When he was talking about this, gold was trading at $1,800 an ounce, and the stock market was trading around $13,400. Now, I want to show you a chart of gold. Now, if you're not listening to this on the live or watching this live, then you're just going to have to understand, believe me when I say when I explain to you what the chart is showing. But blow that up full screen, Darren. That little point where I have highlighted, I've got a big circle around it and arrows drawn to it. That was September of 2012. Gold was trading at roughly $1,800 an ounce. And Peter Schiff is out on CNBC talking about how gold is going higher, the dollar's going to collapse, and he managed to come out and say that right before gold dropped from $1,800 an ounce to $1,100 an ounce. A 40% correction. He continues to go out and spew this prognostication to anyone who will listen anytime he can find an angle. Now listen, folks. Some of you would say, well, you know, you can't be right all the time, and certainly eventually he's going to be right. But folks, you can't use that to invest with. You've got to actually understand what causes inflation.